Not the news we would have liked to finish the week with. It's nice to finish on a high note, but unfortunately, it's just been announced that Austria will go into a full national lockdown from Monday for 20 days. They're seeing record case numbers and they have one of the lowest vaccination rates in Western Europe. Now, you might be thinking, well, so what? It's Austria, I'm not in Austria. Unless you are in Austria, then obviously you care a lot. But the problem right now is that case numbers are high throughout Europe. Germany's also seeing their intensive care wards filling up, so they may have to take action soon as well. But now that Austria have taken action first, they're sort of like that first domino that could lead to others doing the same as well. It's obviously not popular for policymakers to force restrictions on people, so once one country has done it, it's sort of like it opens the doors for others to do the same as well. So that's why we care about Austria in particular. Now, the Chancellor of Austria said, sustainably increasing the vaccination rate is the only way to get out of this vicious circle. Too many people have behaved with a lack of solidarity. Now, the euro had already been taking quite a beating this week. It's been reported quite a lot because finally the forex markets were seeing the same concerns that we were seeing in other markets first. Now, it's clear that the conversation with the Federal Reserve in the US is focused now on when they're going to hike interest rates. And with the Bank of England here, we're expected to raise rates possibly as soon as December, especially with the data releases we saw this week. But the ECB are nowhere near tightening right now. It seems Christine Lagarde doesn't care what the markets think. She's not concerned about that. She's only concerned about the measures she's looking at with the economy. So just yesterday, she said, "We must not rush into a premature tightening when faced with passing or supply-driven inflation shocks. At a time when purchasing power is already being squeezed by higher energy and fuel bills, an undue tightening would represent an unwarranted headwind for the recovery. We should continue nurturing these forces by not withdrawing policy support prematurely." But the thing is, if we're going to be seeing more lockdowns sweeping across Europe, this could harm economic growth, which means tightening could come even later. Meanwhile, Eurozone data is showing inflation is on the rise. So is Europe going to be dealing with the issue of stagflation? Now, if you don't know what stagflation is and you want to know more, click up here for our explainer video on the topic. Now, I read something quite interesting on the Bloomberg website this morning. They were basically talking about how the decline in the euro seems to be following the Eurozone economic trend, as we can see from the Citigroup Economic Surprise Index. So this index is basically a gauge of whether economic data exceeds or misses analyst expectations. So this year, the US has surprised to the upside. Meanwhile, Europe has been disappointing. And so it sort of stands to reason that the Fed are looking to tighten while the ECB are not yet. But as a result of that, if we look at the index for the Eurozone minus the US, we can see that the drop in the euro is pretty much aligned with that. So if we're going to see worse economic data because of lockdowns and there's no tightening in sight, there's a good chance that that trend is going to continue. Meanwhile, the options market also seems to be quite uneasy with the euro at the moment. There's been a surge in demand for put options, among other measures that show nerves with the options traders. But interestingly, when I look at the markets, I can see we're hovering around a key area on Euro USD, despite the momentum this morning. So we had the daily confirmed 161.8 level where it failed earlier in the week despite the steep drop towards the level. Meanwhile, at the time of filming this, we have a double confirmation on the 4-hour chart and again on the even shorter term 1-hour chart. Now, I fully expect there's a very good chance these levels can be broken with the momentum we've seen so far today. And as you may know, the Duomo method, well, we only want to be trading steady state markets rather than the herd activity that we've seen so far today. But still, it's an interesting area to keep an eye on and a clear path of resistance for the price. So let's see what happens. Although having said that, whenever I talk about short-term charts in these videos, by the time this video is actually released and you watch it, then things have changed a lot anyway. So just for point of reference, we're just before midday right now when I'm filming this. So as the US session starts in a little while, things may change. But anyway, let me know in the comments how your week has been. Any trades that you've opened, I hope it's been a good one for you. Also, let me know your thoughts on this recent surge in cases and the news about Austria going into full lockdown. Are you concerned about it? Do you think it's going to affect the country that you're in? Also, hit the like button if you've liked this week's videos and you want to support the channel, and I'll see you next week. Have a great weekend.